Okay, first of all, we're going to look at the New Zealand dollar on a monthly basis. And I've already drawn this line because we really aren't here to look at really old trends, but look at this right here, how pretty this is. It stops right here. It's actually a couple pips off if you measure it exactly, but it's very close to having a 38.2 percent. If you move this up a little bit, you're going to get an exact, and look at this, comes down, hits that same number, I think it's just a few pips short, and then it goes across. So you can see that this 38.2% retracement became a very solid support line for this pair on the monthly. Okay, now, but we want to, really what we want to look at is this movement right in here, this V. So let's go, first of all, to the weekly. Okay, now I'm going to expand this a little bit just because it makes it a little easier to see. Okay, now on the weekly, first thing I would do, now we were actually talking about this on the board a little bit the other day, and so this is in lieu of answering questions on the board. But you can see I always start from the bottom to see where the retracement should be. So from the bottom, I can be very comfortable. Okay, look, I'm not going to be exact because look, that clearly retraced there. So now I'm going to start again from that point at the low of the pair. Going to go here, and again, you see it retrace. Now, if it ever looks like it almost looks dead on there again. So we're going to take that off. Now, before we move forward, one of the things I want to point out is this consolidation right here. So when I see a consolidation, I always wonder why, because there's a reason they're stopping and saying, you know, where do we go? And so look at this right here. I love this. Look at this consolidation. The top of the range is the 50% of the move from here to here. The bottom of the range really is the 38.2. So they are using Fibos to define their range. Beautiful. But what's happening with this pair is that it's stopping the market saying, look, we've already retraced 50% of this move down. Before we don't have any reason fundamentally to keep going long, to say that the Kiwi is strong or that the dollar is weak. What we're going to do is we're going to wait for a fundamental trigger to tell us it's ready to move forward or to move down in any one direction. So that's what they're doing is they're sitting here, and I find it very interesting that they're using those retracement levels to bracket the range. And it's a beautiful example of Fibonacci. So here it happens on, I believe it starts up on July 10, 2009. So it starts back up and it breaks that range. Now, I looked to see what it was fundamentally that helped them do it. I could not find anything on the New Zealand dollar that really was a good reason for them to start breaking that range. However, if I go to the Aussie dollar, look at this. Where they started to break through their range as well was also July 10th. And I looked on the calendar for the Aussie and found that there was an interest rate statement where they stayed steady. And evidently that was enough unless there were other things going on. But that is why. The movement started up on the Aussie, and I'm sure the Aussie just pulled the Kiwi up with it. So you can see here. So what we're going to do is get rid of this line. And now we're going to take this one. Okay, so we're going to see. Okay, and so you can see the 38.2 is 7082. Okay. 7079. We have now completed a retracement against the weekly, and we have, not only that, let's expand this. Let's actually go down to the daily and look at this. And we have done a counter retracement. Look at this. We drop down again, and now it looks like this is a really good sign here. It has hit the counter retracement on the retracement. So not only did it retrace 38.2 or more, it now has gone back and turned around and retraced against this move down. So lest we have ever thought that this was actually a reversal in the making, it's now giving signs that it wants to go up. So you're starting to get very comfortable with the fact that this pair is going to move up. Now, obviously, you're going to track the Aussie dollar and the euro dollar on this move and look for some good entry points. And I'm not going to tell you what those entry points are because it's probably the time has passed or whatever. But these are excellent signs that this pair is back in trend. And I would say as soon as you move past here, you're in really good shape. So now, if let's say that you were looking at this, let's look at that on an hourly and see how it's doing on an intraday. Looks like it started up yesterday. Last night. It did a intraday reversal right in here. But I would say, oops, that's what I get for trying to be fancy here. So you could draw that retracement. That was from the 15th. This is from the 16th. And you've got a retracement on the full day here. So you're in good shape for the daily. Now, let's say that you were looking for an entry. You can even go down to the, I'll go down to the 15. I won't go any further. Now, what happens on these very small time frames, like the 5-minute or the 15-minute, is that sometimes, that for the most part, you will see a big move up, or even on one candle, a 50% retracement. So you always want to watch and find yourself sitting and staring at these lower candles sometimes just to get familiar with the ebb and flow as it goes up, it goes down, it goes up, it goes down. So as you can see right here, look, this is just an intra-hour retracement. And look, it did a 61%. So it's not unusual for them to do like full reversals in a 15-minute time frame. And to tell you the truth, it means nothing. But don't expect that it can do a 23 or a 38 and be done and you can jump in. You want to wait until you make sure that you see it reversing, because this comes right down to entries. Okay, no buyers, my buy, sell, or hold recommendations here. This is certainly not a viable entry. As you can see, it's about 5 p.m. Eastern. not necessarily a good time to be entering any trades until after retracements are done. So you want to make sure all retracements are done for the day. You want to see where you are in terms of retracements for the weekly. For instance, this one, I love this because the retracement is complete. It's now gone and basically proven that it's probably inclined to go long. That's not the absolute, because anything can happen. You want to look for fundamental reasons. But you also want to look and make sure that the pairs have completed the retracements on the bigger time frames, or where at least where they are. Okay? So that's it.